also?
No.
Okay. So getting to your... Okay, so no impact on demand or even on the asset quality side due to the deficient monsoon as of now is the key takeaway. So getting to your Vision 2026 plan, you plan to, you're planning an AUM of 30,000 crore by FY26. You want to double your branch network, triple your housing finance AUM. Do you want to tell us a little bit more about this Vision 2026 plan and what would the other ratios look like? Do you have anything in mind when it comes to what the asset quality should look like, your disbursement growth?
I'm sorry, what are the 30,000 crores? I don't get that number.
Okay. So Shriram Housing Finance, we understand, is eyeing a 30,000 crore AUM by FY26. Its AUM growth in the last quarter was about 9,500 crore rupees.
No, it's not growth. They are at 9,000 crores as of now.
They are at 9,500 and they want to hit 30,000 crore. So do you want to tell us this glide path?
I think the managing director of that company is better suited to answer this. But anyway, since I'm on the board, yes, they are looking at an aggressive growth, particularly in the affordable housing segment, and they've been in a sweet spot. They're growing well, and the portfolio is also performing well. So they are confident that they will be able to do that. Basically, they're also expanding their network. So next 2 years, yes, that is the target.
Got it.
Got it.
Mr. Chakravarti, let's talk about net interest margins for you, sir. Could you tell us, will we see a slight compression once again in the second quarter? Or what are you seeing out there?
Hey, our borrowing costs, incremental borrowing costs also have not gone up. I mean, there is an impact of 5-10 bips as of today. So that is not going to impact any of our net interest margin. It should be steady as we've seen in the first quarter. We don't see any dip from the first quarter.
So around 8.5% in that zone?
0.3, yeah.
And do you see potential improvement from here, sir, as we go forward beyond the second quarter?
So it depends on the market and the money market. So I don't think I would like to speculate on that as of now. We'll see going forward how the rates are. But I don't think so. We'd be happy to hold it at this level. Because I don't anticipate any rate cut also.
So can't say for sure that borrowing costs have peaked. Cannot say that.
I mean, I don't expect a rate increase also. So I hope the rates stay where they are as of now.
Right. What can you do, sir? Can you, say, let's just assume, actually the last month inflation number was a shocker. This month also, it's a little softer as compared to what was expected, for the month of August. But it's unpredictable. If broader rates in the system stay where they are or actually even move a little higher, what levers do you have? Can you sort of increase lending rates in some of the lower yielding products? Do you have that flexibility to protect margins?
We do have that flexibility. Some of our on the used vehicle side, we don't want to put any more burden on the customer. So we will hold our lending rates where they are. There are certain few, about 20-25% of my AUM portfolio actually can take an increase. So we'll see how we can balance that. But ideally, I wouldn't want to put more burden on my customer.
So while you've said broadly the demand has not been affected, could you give us a sense of what the growth was in the month of July and August?
Compared to July, we have disbursed about close to 800 odd crores more in August, and September is going at a good clip. So, as a number, I may not be able to give you the exact number, but July to August comparison, I gave you 800 crores more.
And how was July, sir, in terms of disbursements?
July was about 10,500 crores.
Compared to June, higher.
It was higher.
Okay, so July over June is 1,500 crore higher, and August over July is 800 crore.
No, I'm sorry. July total disbursement was 10,500 crores.
10,000. Okay.
Yeah. August was about 800 crores, odd plus more.
I mean, broadly, Mr. Chakravarti, the guidance has been 15% AUM growth, right? So we're on track with that?
We are on track. We are on
you're on
track.
track.
Slightly
And
higher.
Yeah. Sorry, slightly higher.
Yeah.
How much higher? Since you gave me that.
Let the quarter. I mean, I'll come back to you once the quarter is closed.
Okay, no, got that. But for the full year, we should work with that 15% kind of number. That's what you're looking at.
Yeah. You're on target.
And your net interest margin guidance was, I think, 8.5% by the end of this fiscal year.
Yes. So it should be around that, between 8.3 to 8.5. I don't think.
8.3 to 8.5.
Okay.
Yeah.
Mr. Chakravarti, one of the things we kind of picked up recently was the fact that, I don't know if you saw, but we had the management of Piramal Finance with us a few weeks ago, and they were talking about risks in the unsecured book for the industry as a whole, not for any one company. The RBI in one of its meetings with NBFCs, we'd reported that they were also kind of asking, why is this segment growing so fast? Could you tell us what is the growth rate in personal loans for you, sir? And what's the situation at Shriram Finance?
See, for me, my entire personal loan book consists our unsecured loans are less than 5% of our total book. One, two, we only give personal loans to my existing customer who has finished a cycle. So we don't do, as of now, we are not doing any market PL. So plus, on top of that, as I told you, my entire book is about 5% of unsecured book is about 5%. So we are, and we are seeing, we are not seeing any stress there, even in that 5%.
You're not seeing
And
any
our
stress
base
there.
is small. So
Yeah.
since the base is so small, any growth will be seen as 30-40% growth will be seen.
I get that.
Yeah. So we're not unduly worried about it. I know that we have to be cautious, but it's a small portfolio.
It's a small portfolio. And what is the rate of growth there, sir? Is it growing at a much faster clip as compared to other segments?
Yeah, it's growing at, as I told you, between 30 to 40% is the growth. But the base is very small. So as we add branches, as we add this product into new branches, the growth seems high. But as I said, again, base is small.
Just one last question, Mr. Chakravarti. We've heard from auto companies, sort of CV makers. We've heard from other finance companies in the segment. You as well have told us that this upcycle in commercial vehicles, which started perhaps in, December of 21, January of 22. So we're some time into it, but there is perhaps another 3-4 years of this upcycle. That's how this cycle works. And we're in the initial phase of this. Would you kind of agree with that kind of characterization, sir?
Yes, because I think we are seeing the beginning of the cycle. We are at the beginning of the cycle, and I think it has a good way to go. We are seeing demand across segments, across all segments of vehicles. So I think next 3-4 years is a good time for the manufacturers and financiers.
Okay. All right. Got that. Thank you very much, Mr. Chakravarti. Appreciate you joining in. And it's a pleasure, as always, having you with us here. The stock's done well. And, there is a fair bit of interest in the commercial vehicle space, both financiers and, of course, the OEMs themselves. The market is in a pretty good shape, I think. We've got the Nifty, which was knocking at, sort of being up 3 digits. It's up 80 points. So, yeah, 20,150 on the index, Rima.
We've got another management waiting by KEC. They've bagged a slew of orders recently in the transmission and distribution business. They won orders to the tune of 1,145 crore rupees across various segments like civil, cable, data centers, FMCG. They've also secured orders close to about 1,000 crore rupees. The order intake this year so far has been 7,500 crore. Vimal Kejriwal, Managing Director and CEO at KEC International, joins in now. Mr. Kejriwal, morning. Rima here. So year to date, FY24 so far, order inflow has been about 7,500 crores?
Yeah, morning, Rima. I think you are absolutely right. We have got around 7,600 crores, which is roughly 30% higher than what we had earlier, last year.
And how would that position you in terms of full year order inflows? Because your guidance is for 25,000 crores.
I think we are in line with the guidance because we also have L1s of, more than 3,000 crores. So I think we are pretty comfortable, and with a tender pipeline of close to 1,10,000 crores, I think we should be able to reach our guidance.
Should be able. So how does business typically get impacted, pre-elections? Do we see a slowdown in the tendering process or the award of orders, the decision making? How are the next 9 months likely to be for you historically, ahead of the elections?
So typically what happens is that just before the code of conduct comes in, or let's say the day the code of conduct comes in, from that day onwards, the formal ordering process comes to an halt or in government, basically I'll say railways, and to extend the PSUs and all that. And that will continue till, the elections are held. So maybe for a month and a half or whatever is the time the code of conduct is there, you will not get fresh orders from the government sector. It doesn't impact the private sector or anywhere else. So that's one part on this. But typically, many times we see that there's a rush to award the orders before the code of conduct comes in. So wherever your L1, etc., there we will see a slew of orders coming in. As far as execution is concerned, there would be some impact on execution in case of orders which require, some help at the ground level with the district administration. You need a police help, or there's a ROW, or there is some other clearances required. At that point of time, you find the district administration doesn't want to, do anything which can create a problem for anyone. So there could be some minor impact on execution. But on the other hand, what happens is, like, we are doing a lot of water projects or we are doing railway projects. There will be a lot of pressure from the client saying, why don't you finish these projects so that their impact can be there? So it works both ways. And with our current order book, I think we are pretty comfortable that it will not have any significant impact on our numbers.
Mr. Kejriwal, good morning. Prashant here. Sir, the 1,10,000 crore tender pipeline that you spoke about, these are projects which have been put out for bidding and you've placed bids and awaiting results, or this is visibility of projects?
So it's a mix of both, Prashant. These are tenders which have already bid where results are not yet out, and tenders which have already been issued or about to be issued. Okay, so it's a mix of both.
So to Rima's question, if we did not have these state elections, etc., and the general elections next year, would this tender pipeline, in terms of realizing some of this sort of orders, realizing some of this value as orders for you, would it have happened faster? Will this get a little delayed, or not really? As you said, it balances out.
I don't think it will have much impact, to be very honest with you, because I'll tell you what will get impacted will probably be the railway tenders and a part of the power transmission tenders. Okay, rest of all, most of it is private or international. So I don't see anything significant, any impact. No.
So railways and power transmission is where the most excitement is. If you've been noticing, stocks and companies are just absolutely ballistic in this space. But you're saying that's interesting. You're saying if there had to be a bit of a push out, etc., it would perhaps be in these segments, right? Railways and the power transmission space.
But let me add one thing. On transmission side, we are seeing a huge rush and a huge push to award tenders. Okay, because I think with the way even the G20 went out, the renewable piece is getting more and more focused. And obviously, that a solar park can be put up in 12 months or 15 months or whatever time, well, the transmission line and substation will take longer. So we are clearly seeing a huge amount of push happening on award of transmission line and substation tenders, before the elections. Very clear.
Yeah, no, that's very interesting. So again, kind of, it's a bit of a pull and push, but I guess balances out. Actually, I wanted to ask you on the thermal side, sir. You know, we've discussed this before, right? And you said that we've not seen a new capacity being put up. So, you know, you don't need the lines then. I mean, if there's no new capacity, there's of course other work, maintenance, etc., which goes on. But in terms of a new cycle on the thermal side, are you seeing the first signs of it? Maybe a short-lived cycle, but it is needed because to bridge the gap between where we are now and when, you know, renewables will be completely able to take care of, you know, the demands. Are you seeing that?
To be honest, we have not seen much of it. I think the only one or two places where we have seen were where the plants were operating at a very low capacity because of economic reasons. Now, those plants are also operating at a higher capacity, and we have been at a couple of places have been asked to, fast track the lines, etc., to these plants which were, I'll say on a slow track, okay, because the capacity was not there, so those lines were not being needed at that point of time. Now those plants are operating at a higher capacity, so I know of at least one or two lines where we have been asked to sort of fast track those lines to pick up the offtake of the power.
So existing capacity connected to the grid. That's
yes,
the
increase the capacity of the grid, or let's say one circuit is operating, please ensure the second circuit also is built in and all that.
but no, not a new kind of because we had that order from NTPC, right? I mean that announcement from NTPC for a big plant. So that kind of, I think, stoked a fair bit of excitement that maybe we are starting to see something here.
So Prashant, if you look at the timelines, I presume the power plant would probably take 4 years or 5 years. That has been the standard time. I don't know how much now they will do. A transmission line would typically take from 15 months to 18 or 21 months. So what we have normally seen is once the orders for the boilers and others are placed at the power plant, then they start looking at awarding the transmission line. So the transmission line will follow probably a year and a half later on.
So broadly, how have the raw material costs for you been in the current quarter? How is cost inflation?
So the costs had been very stable for the last, I'll say, 3-4 months. This month we are seeing some attempt by steel producers and cement producers to push the price up slightly, which is normal now that you're towards the close of the monsoon. But otherwise, I think they have been pretty stable. I think we're pretty happy with the way the costs have been stable.
Okay, and this attempt by the steel and cement producers to push through a little bit of a price hike, will it impact your margins? What's the price hike that they're asking?
No, I don't think it's significant. It will impact the margins because, this time what happened is if you look at the Q1 part of it, April to June, which is the time when the prices normally go up before the monsoon, did not go up. So actually we had some beneficial run, so that will get compensated. I don't think it will impact the margins, no.
And what's the extent of price hike they're asking?
It's still nominal, a couple of thousand, in steel, nothing significant.
So on track for 7% margins, sir?
What we have said is, 7 for the year. I think we are on track, yes.
You're on track. Got that. Mr. Kejriwal, great to speak with you, sir. Appreciate you joining in. And it's a pleasure, as always, having you here on CNBC-TV18. Good conversation, as always. 683, stocks absolutely flat, but it's done so well. Actually, the power transmission cable stocks, I mean, all for the year, KEC is up 40%, and it's had a last few very good years starting 2020. We'll take a very quick commercial break here. Mitesh will be joining in with some technical trading ideas on the other side. So that's coming up. Focus on markets. Stay with us.
There are two stocks particularly that I'm looking at. One is Mazagon Dock, because the kind of run that we've seen on that particular stock, the government entity holds close to around 85% out there. The market capitalization is close to around 43,000 crores approximately, and the stock is trading at more than 50 times its forward earnings. So, at some point in time, the government could be tempted to take some money off the table. The other one I'm looking at is IRFC. 86% stake with the government of India, more than 1 lakh crore of market capitalization. And on a price to book basis, it's trading at nearly around 2 times odd. So maybe these two could be interesting, interesting stocks going ahead, because at some point of time, the government of India could take some money off the table. So just thought I'll highlight that as well.
कितना नुकसान हो रहा है। तो इस समय तो जैसे पूरे प्रदेश की स्पिरिट हमने देखी है, भावना देखी है कि सरकार में भी वही भावना रही है। मैंने रास्ते में आ रही थी, कुछ लेडीज़ श्रमदान कर रही थी। उन्होंने कहा कि जो नेशनल हाईवे है उसमें काम आस्ते से चल रहा है, उसको तेज़ी से करना चाहिए। तो पूरी जो कुछ ये बता भी रहे थे कि काफ़ी लोगों ने दान भी दिया है। कुछ रास्ते में हम कुछ लोगों ने रोका, उन्होंने भी, किसी ने 5 लाख का चेक दिया, 1 लाख का दिया। ये भावना जो है, ये जो हिमाचल की भावना है, जनता की भावना है कि एकजुट होकर आपदा का सामना कर रहे हैं, उसी भावना से जुड़ी हमारी सरकार की भावना है और हमारे मुख्यमंत्री जी की भावना है। तो सब इकट्ठे इस तरह से काम कर रहे हैं, एक दूसरे की मदद करने के लिए, एक दूसरे की सहायता करने के लिए। बहुत बड़ी चीज़ है, पूरे देश के लिए एक मिसाल है और पूरे देश को इसी से सीखना चाहिए। लेकिन इसको देखते हुए मैं ये कहना चाहती हूँ कि केंद्र सरकार को भी इसी भावना से मदद करनी चाहिए। इस समय ये नहीं देखना चाहिए कि यहाँ पे हमारी कांग्रेस की सरकार है या भाजपा की है। ये राजनीतिकरण इसका नहीं होना चाहिए। जितनी मदद हो सके उतनी मदद हिमाचल की जनता की होनी चाहिए।
Okay, welcome back. You've got what, 40 points now. So there's a sharp climb down which is happening on the index. 20,100. We actually almost got to about 2,200 earlier. Let's see if that is the case for Nifty Bank. Oh, wow. I mean, the Nifty Bank is now completely lost everything and it's in the red. The day's high on the Nifty Bank is 46,153 and we're at 45,898. So take a look at that. The mid and small cap indices will also come up on your screen. There is a bit of a sell-off there as well, but 0.5% on the mid cap index, and I think the small cap index has also come off the day's high, but it's still got 1%. So not like the Nifty Bank, which is actually in the red. Mitesh is with us, so I think good time to get his thoughts on what's going on. Mitesh, I mean, this is not the one-way kind of day that there was. It looked pretty good early on, but this is complete opposite. Go on.
That's right, Prashant. I think the start was very good, and I think the momentum is still there. But I think just that overbought situations sometimes do bring in intraday profit booking. As of yet, it doesn't look, some kind of a reversal happening at higher levels. Though I think, as I highlighted, the Bank Nifty, that's 46, 180, 200 zone is an important one, and we got a high of around 46, 154. So I think that's the hourly and the daily closing pivot. So till we get past that, I think there will be some signs of profit booking, but otherwise I'm pretty okay to hold my long position despite the fact that there has been some intraday declines. The new sectors which are showing breakouts are sugar. I think you were highlighting, one of our research analysts was highlighting the reports which have come out from the broking houses, and IT. So I think that's where the focus could be. I would recommend a buy on Balrampur Chini. Disclaimer, I have personally futures position. It's also recommended to clients, so there's vested interest. But a good breakout taking place over here. So that's a buy with a stop at 420 for targets of 475. And LTTS is the other one from the IT pack that's breaking out of a sideways consolidation for last few days. So that's a buy with a stop at 46.40 for targets of 48.50.
Okay, sugar and a few IT names. Infosys has turned positive for 2023. It was the only large cap IT stock with negative returns so far. But now even Infosys has turned year-to-date positive. But let's, Mitesh, thank you very much for joining in. Let's turn our attention to commodities. Manisha is here with us on the big wall. Manisha.
Thank you so much for that. Well, I'm looking at nickel prices. Well, overall, metals actually have been slightly under pressure, but nickel clearly underperforming the whole sector there. We've seen prices decline by 3% on week. It is down by nearly 8% for the month. And for this year, we are down 32% when it comes to nickel prices. Well, we have seen the dollar index continue to trade on a higher side. A 6-month high is onto that one. The US inflation data has come in on the higher side, suggesting that you could be looking at least one rate hike now in 2023. And the higher rates could continue for longer is what's what's weighing onto the prices here. For nickel, essentially, it also has to do with the EV demand, which has slowed down, as we have seen in sense of numbers from China and Europe, and that has led to increase in battery stock with manufacturers there. If you look at the battery prices for the month of August, we saw a nearly 10% decline onto that one. Also, the lithium deposit that has been found in US now takes all the attention to the lithium ion batteries. So the nickel inventories have seen a rise because of that too. Also, when you look at the global nickel inventories, they are in surplus at the highest in last 10 years. So there is good production, there is enough stocks, and the inventories have been surging as well. Add to that the fact that the latest report suggests that Canada's Telon Metal Corporation is looking to increase production worth by 20 million. So markets are looking at supplies coming in from all sides. When you look at the prices in this year itself, we started with $30,000 a ton in the month of January. We are trading at around 19,500 right now, and the markets do believe that these levels will also not hold. So further lows is what can be anticipated for this one.
Thank you for that. And now let's get to the big movers of the day. Surbhi is here with Bombay Dyeing still up 15%. Surbhi.
Thanks so much for that. So Bombay Dyeing is going to monetize a big land parcel of 22 acres at Worli for 5,200 crores, which is close to like 2 times their current market cap. Now they're going to sell this land to a subsidiary of Sumitomo Realty. This is going to be done in 2 phases. In phase 1, they will receive 4,700 odd crores, and in phase 2, they'll receive 525 crores. Now on completion of this deal, they will be able to extinguish all their current borrowings and save on interest costs going forward. Their current debt is 3,642 crores. They will also be able to pay dividends in the future, and they will have a strong treasury balance to fund the future realty projects. The company has also said that the board has approved the development of unutilized land parcels, which has a potential to create 3.5 million square feet of residential or commercial space and a revenue potential of 15,000 crores. Additionally, 2.7% equity worth 92 odd crores change hands via block deals. If you look at the shareholding patterns, the major shareholders which hold more than 1% stake in the company is LIC with 1.39% and Madhuri Kela with 1.65%.
All right, Surbhi, thanks for that. But, stay on, because sugar is the space, right, where I think DAM Capital has initiated coverage. It's interesting, right? They're basically saying that because of the production numbers and international sugar prices being high, etc., prices will stay high. I mean, retail prices will stay high. Tell us more, Surbhi.
So that is one of their investment thesis, that the retail prices are going to be high. So let me start that they've initiated coverage on the entire sugar space with 4 sugar stock names in focus: Balrampur Chini, Triveni Engineering, Dalmia Sugar and Dwarake Sugar. All will have a potential upside of anywhere between 17 to 29% from their current levels. Now, as you said, they said that the demand supply is in the favorable zone. So because of the El Nino conditions, the productions are hampered currently, and which is why the domestic sugar prices will be above 37 rupees per kg according to them. Secondly, they are betting on the ethanol play. So the ethanol blending program is progressing well. The government has a target of blending ethanol of 20% by 2025 and 2026. Currently, it is at 11-12%. DAM Capital says it could be delayed. The target of 20% could be delayed by a year or 2, but still not a threat to the entire sugar space. And thirdly, the distillery capex for all the sugar companies are on track, and most of them are likely to be completed by Jan 2024. So additional ethanol volumes will result in better earnings growth in the next 3 fiscals according to them.
Thank you for that. Let's get into a break. On the other side, we'll invite Viren Shetty, Executive Vice Chairman at Narayana Health, to discuss their business.
8, more investors joined the Reliance Retail's $100 billion club. In the latest, KKR has made a follow-on investment of 2,070 crore rupees in the retail arm of Reliance Industries to buy 0.25% stake at 8.36 lakh crores of valuation in rupee terms. Now, with this investment, KKR's total stake in RRVL will increase to 1.42% stake from 1.17% stake on a fully diluted basis. Now, the last investment, remember, for KKR in this company was at half the valuation 3 years back. Now, looking at the second round of fundraising at $100 billion, which started just before its AGM in August, well, Reliance Retail has now raised a total of 10,347 crore rupees by selling 1.24% stake to Qatar Investment Authority and now KKR. Mukesh Ambani had hinted at a strong global interest in his retail business in the last AGM of Reliance Industries. Now remember, it comes after 3 years of the last fundraise at around $50 billion valuation, in which a slew of these marquee global investors like Silver Lake, KKR, Adia, GIC, TPG, amongst others, had pumped in over 47,000 crore rupees for 10.5% stake in the retail arm. Double the valuation comes on account of the scorching pace of growth for the company, as the chairman guided that retail will be the fastest growing business in terms of revenues as well as EBITDA. Now sample this. Reliance Retail has shown a 30% year-on-year revenue growth in FY23, which is faster than the other business verticals of RIL. Now, in terms of its financials, 2.6 lakh crores of
Okay, welcome back. You know, you got the market, which is now actually the Nifty also has got just 10 points left. So this is a massive move lower from the day's high. And on the Nifty Bank as well, we're down about, 50 points or so. It's largely flat, right? On an index of 46,000, that's not very much at all. But the point is not being able to hold on to those levels. Now, we've got the management of Narayana Health. Viren Shetty is Executive Vice Chairman at the company, Narayana Health, to discuss what's next for the business. And what's next is a new logo, new branding. Viren, good morning. Great to have you with us here. Prashant this side. Congratulations on the rebranding exercise. I mean, tell us why you guys felt the need for it. What was the idea behind it, and what does it signify?
Well, there's the short answer and the long answer. The short answer is that we tried a lot to unify our name. We're known as NH in some places. We're known as Narayana Hridayalaya in some places. Some places we're not even known by that. A lot of people just call us as Dr. Shetty's Hospital. And because we're getting into clinics and we're going to start a health insurance company, and we wanted to unify the look and feel of the different properties that we own, we decided to unify it around Narayana. And so it'll be Narayana everything. Narayana Health being the mother brand, Narayana Clinics, Narayana Hospital, Narayana Cancer Care, Narayana Orthopedics, Narayana Heart Care, Narayana Labs, and eventually Narayana Health Insurance.
Viren, congratulations on the branding then. You know, we just had the management of Star Health, and they're sort of in a slugfest with many of the Ahmedabad-based hospitals and clinics. Do you have an opinion on that? Have you been associated, with your presence in Ahmedabad with what's happening with Star Health and the, issues that have resurfaced on social media about the claims not going through, etc.?
I have many opinions on Star Health. I also run a hospital in Ahmedabad. See, you always find healthcare providers and healthcare payers being on two sides of the spectrum. There never seems to be a common ground, because one group is motivated to charge for the services, one group is motivated to withhold paying for the services. And the middle ground comes somewhere in the middle. In the end, patients lose out. One of the biggest motivation for us to launch our own insurance companies, because we don't want this. We don't want to be in a situation where patients are denied the kind of care they get because of the plan that they have. We don't want to be in a situation where we have to sit and explain to patients that your plan, what you thought covered 1 lakh, 2 lakh, 5 lakh rupees, actually doesn't, because it's got a whole bunch of exclusions. So without commenting specifically on one company or the other, I would say that health insurance as it is sold in India is not most effective. I'd say it's the equivalent of taking a credit card that only swipes sometimes, and even when you swipe it in a shop, it doesn't pay for the full amount. And that's just not how health insurance is supposed to function. So there are a lot of improvements that can happen, and I'm sure it's something they are working on. But healthcare providers are generally not happy with the attitude that a lot of insurance companies have taken.
Since we're on the topic we're in, where is that issue in Ahmedabad? Is it close to getting resolved?
I'm not sure. But the issue essentially boils down to a lot of the arbitrary disallowances and the unilateral pricing policy. You see, no two hospitals are the same in terms of the quality of services they offer and the kind of care that you get and the equipment that you use and how it is set up. And when an insurance company tries to do a uniform pricing for every single procedure, you're obviously going to get pushback from some hospitals who feel that this is unfair because they are spending more on better infrastructure, better quality, better medicines, and they're getting paid as much as someone else who may not be doing the same thing. Now, there should be a range of services at a range of price points, but that is hard to reconcile when you're trying to unify it at one single price.
Is this, as you see it, is this in health insurance industry issue, or is it about one company?
It's not, it's just health insurance as a model itself, and it's not specific to India. This is how it is throughout the world. There are always challenges when healthcare providers have one opinion and healthcare payers have another opinion over how much a thing should cost.
Maybe a common regulator, right, for insurance and healthcare. I don't know. I mean, if that is the that is a solution, or
no, you can't regulate this. See, the point is you have to accept that this is not a uniform thing that you're buying. This is not like a single iPhone, which is one model that or the whole company is buying. It's not one model of car. Every patient is different. Every case is presented very differently. You have to open yourself up to the chance that, see, the other one is insurance companies don't take the time to understand their patients and to understand the risk profile. Right? The amount of underwriting, the amount of work that used to happen before to screen patients has just gone away since the pandemic. They don't do medical screenings anymore.
Viren, you want to just get us up to speed on your insurance plans? Where is it reached? You were in talks with the IRDA to sell these bundled plans. You've incorporated a new company, Narayana Health Integrated Care. I think you've outlined a capex of 50 crore. This is what we know. What's been the latest update on this and your future plans?
Sure. Our idea for health insurance is one that combines a huge amount of healthcare services on one end, as well as providing a plan that covers comprehensive healthcare. So we call it as integrated care, which is outpatient services, screening, checkups, as well as eventually the surgery that you will require. If you sell a plan that only does surgery, you are doing a disservice for your customers because you're not getting involved in all the things that can be done before to prevent them from getting surgery. So this model has very different names outside. Sometimes it's called managed care, sometimes it's called integrated care. It has different names, but we haven't, for now, we're just calling it as One Health, where it's all provided in one platform from one provider. So we've got a lot of positive feedback from the IRDA. We've submitted our application. They've come back to us with a lot of feedback on how it looks. It's a back and forth process, but fingers crossed, sometime towards the end of this year, we should have positive confirmation.
Calendar year, end of calendar year or end of the fiscal year?
Calendar year is the hope, but more likely it will be by the time we're ready to roll this out, the end of the fiscal year and sometime next year.
This, this will be under the listed hospital company, or this will be separate?
For now, it is under the listed company. It will run as a separate venture. It's called Narayana Health Insurance Limited. And we will be rolling it out just in Bangalore in a very small trial basis for a very limited geography for the patients who are currently being treated by us. And once we scale up, once we figure out the right model of being able to manage patients throughout the entire care journey, is when we'll scale it up across the place.
So do you think this pilot project sort of that you're running in Bangalore, it will run for a year before you take a call to expand on a national scale?
Oh, it'll take longer than that. This is something that we said is services first. There will be a lot of moving parts. There's a lot of work that we're going to do in being proactive about getting people to take medicines, to get checkups, for us to be able to keep them out of the hospital. So it being more services intensive, it's going to be a while for us to figure out the right mix of services and not be in a position where we are too intrusive into patient care while not being hands-off enough that we're actually not providing much value to our customers.
Viren, it's a pleasure having you with us here. Thank you very much for your time, and good speaking with you as always here on CNBC-TV18. Thank you. Well, that's Narayana Health with the perspective on a bunch of issues there, really. A good conversation. Well, the market's up 25 points. We're at what, 20,000 and just under 20,100. The Nifty Bank is come up. It was around 50 points 10 minutes back. It's basically come back into the green. So not staying down either. And the broader market, of course, is doing much better, even though they're also from the highs, there has been a little bit of pullback. It's a wrap on this edition of Bazaar from all of us here. Thank you very much for staying with us. Chartbusters coming up next.
EBITDA of 17,900 crores and profits of over 9,000 crore rupees. So strong on profit as well as profitability. In Mukesh Ambani's words, based on this valuation, Reliance Retail, had it been listed, would have ranked amongst the top 4 companies in India and top 10 retailers globally, as Reliance Retail gets yet another investor to reinforce its $100 billion valuation.
From David to Goliath, from the smallest business ventures to multi-million-dollar global corporations, meet the movers and shakers, today's newsmakers, and tomorrow's leaders. Understand what makes markets move, how companies make quantum leaps, and how giant corporations stay ahead. Get the biggest business stories of the day, power-packed into 30 minutes. On Business 360 at these times.
Now let's get to the big news of the day about Apple Watch and iPhone.
Today, we're adding something really cool. Series 9 enables an incredible new gesture that uses just your watch hand. It's especially convenient for those common situations when your other hand is occupied, like walking the dog or holding a cup of coffee. We think you'll use this all the time. Introducing Double Tap. Just tap your index finger and thumb together twice. It's that easy. You can use Double Tap to answer a call. Let me show you. Hi, Deidre.
Hey, Jeff.
This same gesture also works to end a call. See you later.
Okay, bye.
Their innovative features and industry-leading technologies help improve our lives in so many meaningful and delightful ways. Apple Watch helps us stay healthy, active, and connected. And iPhone impacts just about everything we do. They're with us all the time. And if you left either one at home, I bet you'd.
It's a positive start to trade on the Lal Street. The Sensex and the Nifty trade near record highs. Metal, realty and auto stocks gain while financials lag a bit. Mid-cap index outperforms.
Bombay Dyeing surges over 15% after announcing the sale of its Worli land parcel for 5,200 crore rupees to Goisu Realty in 2 phases. Additionally, 55 lakh shares change hands in a block deal.
Sugar stocks such as Dalmia Bharat Sugar, Dwarakesh Sugar, Balrampur Chini and Triveni Engineering gain. After Dam Capital issues a buy call, the brokerage says demand supply for the sector is in a favorable zone and El Nino could further hamper production and keep sugar prices above 37 rupees per kg.
Stocks buzzing on news. Suvain Pharma secures a cabinet nod for a 9,500 crore FDI in the company for 76% stake. Bajaj Health gets an EIR from US FDA for API manufacturing facility in Gujarat. NBCC bags an 80 crore rupee sale order and IRCTC signs an MOU with the MSRTC to enable online bus bookings.
Star Health gains after clarifying over concerns surrounding cashless and reimbursement services raised by Ahmedabad Hospital and Nursing Association. Management tells CNBC-TV18 that discussions with Ahmedabad hospitals have reached an amicable solution. Hello and welcome to Chartbusters on CNBC-TV18. I'm Ekta Batra and with me is Pavitra Parekh. Well, it's turning out to be a session where we're seeing some amount of traction back in the mid-caps. We saw it in yesterday's trading session where we did see that recovery come in the second half of trade, and now we're building on those gains. So the mid-cap index up around 0.7%, 280 odd points in terms of absolute basis. The Nifty is up around 18 odd points, so just about consolidating at this point in time. Let's see whether there's any kind of pickup in momentum in the second half. But remember, sitting at record highs, so no complaints. Hi, Pavitra.
Hi, no complaints, you're right, but there has been a little bit of a pullback in the mid-cap, small-cap, still holding up, very well. So that's encouraging to see after the 2 kind of shaky days that we've had in the past. I just want to point out some pockets which are doing very well. The entire sugar pack is up and about in trade. They have anyway clocked in good gains over the past couple of weeks, but that entire pack is moving very well. You have metals and the PSU stocks which are back in a big way. Names like Hindalco have seen an over 6% kind of up move in, in this week itself. So looking very solid there. For the banks, it's quite split because you have the PSU banks which are doing well. We saw this yesterday as well, while some of the private banks are lagging a little bit. Other financials like the Bajaj twins also seeing a little bit of pressure today. That's the shape of the market. We're going to keep coming back to this. But first up, let's get you a technical check as well. We have Sachidanand Utekar of Trade Boards joining us now. Sachidanand, thanks for joining us on the show today. After a little bit of a shaky last 2 days that we've seen, right now we're holding up quite well, almost at that 20,100 mark as well. How do you see the rest of the session panning out? Because there has been a little bit of a pullback that we've seen.
Good morning, Pavitra. Good morning, Ekta. I think clearly when we look at the trend still looks confident. We have Nifty, which is trending well above its 5-day exponential moving average. Even at this juncture, the average is placed somewhere close to around 19,980. And unless we don't see a closing below the same, we may not see any distortion in momentum. We have seen some profit booking here. The sector rotation has been really good. For the day, we believe that 20,070, 20,050 looks like a very dependable support. The gap which was formed in the opening, that particular gap has been filled. And if you look at the entire data set today, we are expecting the expiry to shape up somewhere close to around 20,150 and 20,200 within this particular range. So clearly, I think the declines are healthy. One can start accumulating Nifty. When we look at Nifty Bank as well, the 45,800 support zone looks promising. But the range looks very much skewed today. So we are not expecting any, bigger move above 46,200. So probably Nifty Bank could remain within this particular range. But clearly, I think Nifty is still presenting a good decline here, which can be accumulated. Keeping a stop loss somewhere close to around 20,050, one can initiate some long positions here. Positions should be reviewed once Nifty starts trending near to that 20,200 mark.
Okay, all right. But what would you recommend in terms of specific stocks in this market, Sachidanand? There any picks?
Ekta, I think the focus clearly remains on the Nifty metal pack, and within this particular space, we have seen some fresh breakouts getting exhibited. One particular stock which has been on radar is Jindal Steel. Now, if you look at the data since September, it has been respecting this resistance zone at around 715, 718. If you look at the way today's move has unlocked, probably there's a good healthy sign that this particular resistance may be cleared today itself, and hence we are looking at a bullish flag formation getting shaped. The pattern is indicating a price target somewhere close to around 748. So we are recommending long position here for our clients. The stop loss should be placed somewhere close to around 698, and Jindal Steel futures can be accumulated. The other stock which has been on our radar is Ultratech Cement. Now, despite it has been trending up near to its life highs, we have still not seen any liquidation or unwinding of positions. Even here, the data is supporting that the 8600 support is very strong. On the higher side, we are expecting this particular move to extend towards 8880, and that's why we are still recommending building long positions here. The stop loss from here on should be placed at around 8580.
Okay, all right, Sachidanand, we're going to let you go on that note. Thanks very much for joining in and giving us all of those technical picks. Do watch out for a couple of these stocks which have seen strong runs. So ITI, for example, is down around 1.5%. Remember, that stock has rallied around 58% this week, just to put it into perspective. And we have stocks such as IOL Chemicals, which did see a strong run yesterday. It's up around 36% year to date. It's seeing a little bit of profit booking in today's trading session, so there's some amount of gains being taken off. But nonetheless, let's shift focus now to our special segment where we will get you a few ideas for profit from Money Control Pro. Madhu Chanda De of moneycontrol.com joins in now to talk about a stock that she's tracking closely. Madhu, over to you.
Equitas Small Finance Bank had a decent run in the year so far, as it is steadily coming out of the rough patch during COVID. Growth continues to be robust, and the key drivers have been micro-lending as well as small business loans, housing loans, vehicle finance, and NBFC. Disbursements have been growing at a fast pace, aided by almost all the segments. Equitas is a relatively de-risked book with a share of microfinance at 19%, and over 80% of the book is secured. Asset quality is improving with every passing quarter. However, in an industry where there is hyper competition to garner deposits, the deposit growth is coming at a higher funding cost, which is getting reflected in the falling interest margin. Investments in products, people, and technology is keeping cost-to-income ratio elevated. The margin pressure might linger on for a while the moderation in cost would be only gradual. We nevertheless expect the bank to maintain its 2% return on assets. In the medium term, improvement in net interest margin and falling cost-to-income ratio would emerge as the key drivers of earnings growth. A combination of strong earnings growth and potential for valuation re-rating makes it a good long-term candidate to add.
All right, thanks a lot for getting us all of those details on Equitas Small Finance Bank. But with that, it is time for a short break. On the other side, we're going to discuss the primary market action, which is very hot. Sami Hotels IPO has opened for subscription today, so we will be joined by Ashish Jakhanwala, Chairman and Managing Director and CEO of the company, to discuss their plans going forward.
How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits, and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
So the combination between liquid hydrogen storage, the fuel cell which is here beneath, and the electric motor gives us long-range flights, which we think can change the aviation. So this is a world first using liquid hydrogen storage with a fuel cell and an electric motor to propel an aircraft. And this achievement shows us that it is possible not only to fly with hydrogen, which we have shown for 100 times in the last couple of years, but also to go long range. So the high density of the liquid hydrogen gives us the opportunity not only to fly emission-free, but also to fly long range. And this is the world first, which was the last technology brick we needed to show that aviation with hydrogen is feasible. So at the moment we see that with this plane, with this liquid hydrogen storage and all the hydrogen we have on board, we can go 1,500 kilometers. In the future, we see a 40-seater, which can go around about 2,000 kilometers.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Hey guys, welcome back. You're still tuned into Chartbusters here on CNBC TV18. Now let's discuss a very interesting new IPO which has opened. Hotel ownership and asset management platform Sami Hotels is in focus today as they've launched their 1,370 crore rupee IPO today. Now the subscription will be open for the public till the 18th of September. So we have Ashish Jaghanwala, who's Chairman, Managing Director and CEO of Sami Hotels, joining us now to take some questions. Ashish, thanks a lot for being on the show today. I just want to begin by, introducing the company because the business model is very interesting. So they, typically tie up with or they buy hotels which are not doing so well, and then they partner with bigger brands like Marriott, like Holiday Inn, and then they turn around these kinds of big hotels. And I guess that's what really helps sort of re-establish them as well. Ashish, take us through a little bit more about just this model. It's not one that we hear of too often. And also take us through what is the kind of management fee that you would pay to, say, a Marriott or a Holiday Inn when you do partner with them on such a project.
Thank you so much for having me here. So the business model is actually rather simple. We believe in the sector. We believe it's got very strong fundamentals for several years to come. Now, how we address that is actually we don't build a lot of hotels because of the long development cycle. But at the same time, we feel there is a huge pool of hotel assets in India which are undermanaged and underperforming. So we've been able to identify such hotels, acquire them. Typically, post-acquisition, we will change the product, bring a strong brand partnership. And by doing so, we've been able to see a significant improvement in the performance of those hotels, right? So of the 4,800 odd rooms that we have today that we own and that they are operating in the country, just about 600 rooms have been built and all others have been bought through this acquisition and turnaround model.
Okay. Ashish, can you tell us where exactly your prime hotels or properties are located and what is the occupancy as of now? And what is the incremental occupancy that you could expect considering that we do have big events taking place such as the World Cup?
So I think, first of all, we are largely a business hotel platform in key gateway cities. So almost 80% of our revenues will come from the big cities like Bangalore, Hyderabad, Pune, the NCR region. So we have focused really on business hotels in gateway cities. And I think that's where we are getting a fair bit of support in terms of growth of economy. We tend to benefit upfront with that growth in economy in terms of our capacity utilization and also the ability to price ourselves adequately. So the last fiscal year, for the whole year, our average occupancy was about 73%, which is reasonably healthy given the fact that we have all business hotels and therefore we tend to have some sort of a lower occupancies on the weekends. I think, yes, all the events are definitely helping the occupancy levels, the G20, then we have the World Cup coming up very soon. But I think we need to get used to this because as Indian economy grows, as the disposable income in India grows, as India becomes focused for a lot of events, both domestic and globally, I think we should get used to seeing a lot of hotels saturating demand for hotel rooms and travel and tourism in India across key cities.
All right, that makes sense. And travel for work has picked up in a big way as well. So I can understand why you're so optimistic. But, you know, Ashish, for now, you said you have around 4,000 keys. At optimal capacity right now, what is the kind of revenue that you think you can do? That's one. And also considering that this kind of business travel is picking up, how many rooms are you planning to add? Is there some kind of expansion target that you have?
Yeah, so first few facts, 4,800 rooms currently operating that we own in India. That makes us the third largest owner of hotel rooms. Our total revenue for the financial year 23 was actually 761 crores, but we also made an acquisition of ACIC portfolio. So including that on a pro forma basis, our actual revenue was 964 crores for FY23. In terms of where this is headed, as you know, my hands are tied in terms of giving future forecasts. But what I can tell is that for the full year, where our for revenue was 964 crores, if you look at average room rates, they've actually improved from Q1 to 2 to 3 to 4. So we've seen very strong strength in pricing power across the sector. And I think that will help us continue to get reasonable growth. So that's just in terms of organic. We also intend actually adding about 600 rooms to our portfolio. Sorry. And those 600 rooms will be added, we'll start adding some inventory starting September next year. And then through the course of next year, FY25, FY26, we are ready to add about 600 rooms to our portfolio to take it to about 5,400 rooms. And that's all of that portfolio is within the company right now. So we don't need to make any acquisition. Significant amount of capital expenditure has already been incurred on those assets. And in addition to that, we are also planning to actually renovate and rebrand about 900 of our existing 4,800 rooms. So if you see over the course of the next couple of quarters, going up to 2 to 3 years, company is quite well prepared to not just benefit from the uptrends that you're seeing in the sector, which will benefit our stable hotels, but we're also prepared to kind of re-rate about 900 rooms in our portfolio, and also in addition to that, add about 600 rooms.
Okay. Ashish, what can you guide on the balance sheet? Because you are looking to reduce your debt. It currently stands at around 2,700 odd crores. How much is it going to come down by? And considering that the business model you have, what can you guide on in terms of a sustainable or average level of debt for the company?
So absolutely right. Our current net debt is about 2,850 crores. We are doing a primary issuance of 1,200 crores, and almost all of it is going towards reducing our debt. So we'll probably, net of expenses, we should have about 1,100 crores available to us. And therefore, the net debt post IPO should be more in the zip code of about 1,750 crores. So that's really the starting point. But I also feel, given the strong tailwinds we are getting for the sector, our ability to add more inventory and reprice some of our existing inventory, I think we are quite well set to say that the IPO, the reduction in debt from IPO proceeds is really the start of a deleveraging story. You would see the company being able to produce, free cash in quarters to come, and part of that will be used for growth, and part of that will be used for continuous deleveraging. In terms of where we expect the debt to be in long term, I think first and foremost, as you know, today is the worst time for me to give a future guidance. But I think that for the sector, about 3.5 times debt to EBITDA, especially if you have good quality long-term debt, is reasonable. But one needs to assess that basis, both the interest rate cycle and also what the economic cycle is for the hotel sector. But I think around 3 times is a reasonable level of debt.
Okay, Ashish, very interesting chat with you today, and we do hope to have you back on as well, perhaps after you list, so that we can talk about more details and get some numbers out of you. That'll be very interesting too. But that is management of Sami Hotels talking about their plans going forward, saying that currently the occupancy is at around 73%. They're also looking to add around 600 rooms. So that is their plan so far. With that, we are going to get into a short break. On the other side, there's lots more market action that we're looking at, so stay with us.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Now let's get to the big news of the day about Apple Watch and iPhone.
Today, we're adding something really cool. Series 9 enables an incredible new gesture that uses just your watch hand. It's especially convenient for those common situations when your other hand is occupied, like walking the dog or holding a cup of coffee. We think you'll use this all the time. Introducing Double Tap. Just tap your index finger and thumb together twice. It's that easy. You can use Double Tap to answer a call. Let me show you. Hi, Deidre.
Hey, Jeff.
This same gesture also works to end a call. See you later.
Okay, bye.
Their innovative features and industry-leading technologies help improve our lives in so many meaningful and delightful ways. Apple Watch helps us stay healthy, active, and connected. And iPhone impacts just about everything we do. They're with us all the time. And if you left either one at home, I bet you'd go back again.
Welcome back. Well, now let's focus on an exclusive story. Sources tell CNBC-TV18 that JSW Infra is likely to open its IPO by the end of September. Yash is here with the details on this.
Well, that's correct. So, of course, the third company from the JSW group after JSW Energy and the other company, planning to list itself on the exchanges. And it's after almost 13 years that the JSW group is coming back to the IPO market with its company. JSW Infrastructure is the same company which essentially handles the entire ports business of the group. And as far as the IPO is concerned, according to our sources, that is expected to open by the end of September this year. As far as the total IPO size is concerned, what we've been given to understand that it would be around 2,900 crore rupees. And as per sources, out of the 2,900 crore rupees which will be raised, the entire amount will come into the company. It's a complete fresh issue as far as the IPO is concerned. And out of that amount, about 900 crore rupees is expected to be used towards debt repayment. About 900 crore rupees is expected to be used towards bringing up an LPG terminal at the Jaigarh port. Also, about 250 crore of the IPO proceeds is expected to be used towards JSW's container terminal that is at the NMPT. And finally, about 850 crore is expected to be used for other expansion purposes as far as the ports business itself is concerned. But of course, important after almost 13 years, the group coming out with an IPO, much anticipated IPO of the ports business. Of course, Adani Ports is another player in this particular sector, the listed entity, and this will be another competitor coming out in the same sector. By September end is when the IPO is expected to open.
All right, Yash, thanks a lot for getting us all of the details on this important story. With that, we're going to wind down in this edition of Chartbusters with the news that the market has pulled back a little bit. Sensex in the red now. The Nifty is down 85 points from the highs of the day, but the small and mid caps are off the day's lows. Looking quite solid there. Thanks a lot for tuning in. We have Trading Hour after this short break.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
You know, what we're looking at right now is the large cap versus small cap or mid cap. Where is the comfort right now? And obviously the comfort is with the large caps, not really with the mid caps. Look, the Nifty is expensive, but not in bubble zone by any stretch of imagination. Nifty is 20.3 times 1 year forward earnings, and 10-year average has been about 18 times. It's the mid cap which is the problem. 25.2 times. By the way, that also is not bubble territory, which Prashant has been highlighting, and I'll go to him as well. The 10-year average is 20.1 times. Small cap at 20 times versus 16.6 times, which is the 10-year average. And the Nifty Bank is actually undervalued right now, 14.2 times versus 16 times. Talking about the Nifty, where have the recent peaks been? And I'm talking about just the recent peaks, the last 8 or 10 years. In 2015, it was 23 times. In 2019, it was 24.5 times. And in 2021, it is 23 times. Considering we are at 20 times right now, another 3 notches could mean another 1,500 to 2,000 points in the Nifty minimum. I'm not saying we go there, but not quite there in terms of bubble territory. Now, there's some interesting things that I'm looking at. Some sectors which are trading at a premium valuation. And no surprise for guessing, a lot of them are mid-cap names, infrastructure, chemicals, real estate, and PSU banks. They're all trading at a premium compared to their own valuations. And sectors trading at discount, there's telecom, there's media, there's private banks, which is interesting, and there's metals. But you know what? There's one more metric which I look at, the number of stocks hitting new highs and new lows. That number has still not reached alarming proportion, 244 new highs and 15 new lows. And finally,
hello and welcome to Trading Hour. I'm Reema Tendulkar. With me is Pavitra Parekh. She's in the Delhi studio, and here with us in the Mumbai studio is Prashant. Hi.
I remember. Special appearance.
Special appearance.
Pavitra, you've been in Delhi for far too long now. I think, what, 2 weeks?
Prashant, you know how nice it is to be here, right?
I know, home city. So enjoying the food, and I don't know about the weather now, but food is always a plus.
And she's enjoying the new studio.
Absolutely.
Oh, yeah, we have a new studio here. It's great. Reema, I think you should come and check it out too.
I will when you come back here.
I was going to actually, now that you mentioned the new studio, I mean, Pavitra perhaps should stand in the middle of the newsroom or something. Show us a little bit of the newsroom, right?
She did on her Instagram. She did about a walkabout of the new studio, but just, of course, just a few glimpses of that. But anyway, let's get back to the markets then. It's off from the session highs, but still holding up in the green. It's nearly 20,100 on the Nifty. Mid-caps are powering through. The mid-cap index is up 0.7%. The Nifty bank, it's been a bit choppy, but right now it's just up close to about 70, 72 odd points.
Well, you know, the broader markets, I think, Reema, are showing absolutely no signs of any sort of doubt or hesitation or anything of that sort. 0.75% in the mid-cap index. And I think you've got a similar kind of gain coming through on the small cap index as well. I mean, the small cap index actually is up 1.25%. So there you go. There you have it. And that's the reason why, I mean, if you look at the broader, the market breadth, right, it's 1,700 stocks higher and you got 450 odd stocks which are lower. So this is, I mean, a clear-cut bullish kind of a day, irrespective of what the Nifty or the Bank Nifty is indicating right now. So let's see. I mean, you know, on the Nifty Bank, we're about, what, 1% away from a new all-time high. On the Nifty, of course, you know, we are, as the next level to watch out for, which the Nifty aims for, is 20,350. So I think we'll have to wait for those levels, perhaps a day, 2 days longer. But the trend seems to be pretty good. You know, we'll kind of look at some of the individual stocks, etc. as well. But Pavitra, what are you picking up?
Well, I think it is this broader market action, right, which is really popping. It's seen quite a good move, and there's a lot of stock-specific news as well today. So whether it's a Bombay Dyeing, there's an NBCC, all of these doing very well. You know, a lot of the stocks that yesterday, for at least the first half, we were talking about the high momentum stocks kind of coming down. All of those have bounced back quite well. So whether it's Mazagon Dock, SCI, you have a lot of the railway stocks, Ircon, Jupiter Wagons is up once again. So all of these are seeing a good move higher today. IRFC is also up, and the entire sugar pack is also up and about in trade. Dalmia, Magad, Triveni, all of these will come up, but it is the entire pack that I'm talking about, which is doing very well in trade. Metals also seeing a good move higher, so some of those names will be up on your screen. So that's what's happening in terms of the market action. We'll talk more about this, but you know, the primary market is also very hot. We were just talking with the management of Sami Hotels, and now there's another fintech SaaS company that is also open for subscription today, that is Zaggle. Now, this is a 563 crore rupee IPO which opens today. So, Reema, take us through a little bit about this company and about the IPO details as well, and then we'll get the management on.
Well, first, you know, just the disclaimer, it's called Zaggle Prepaid Ocean Services. But unlike what the name suggests, there is nothing to do with ocean services. This is a, you know, fintech SaaS company. Now, most companies, you know, Prashant, many companies issue prepaid cards to their employees. It could be for travel expense because they're traveling, you know, outstation. It's a prepaid loaded card. Or sometimes it could be for rewards. Now, that platform, the issuance of these prepaid cards, plus the top-up that you need to do, that is done by Zaggle. So it acts as the interface between a corporate And some of their corporate clients include, say, a Persistent, Hiranandani Group, from the RP Sanjeev Goenka Group, Walk Hard, Mazda.
So it's like a Sodexo card.
It's sort, I guess, this is the limited understanding that I've got from trying to understand what the company does. So it issues these prepaid cards, and it also helps with a lot of services, your expense management on it. So that's why they're calling it a SaaS fintech, at the intersection of SaaS and fintech, but it's largely for those issuance of those prepaid cards to their employees. And 50 million, prepaid cards have been issued by the company up until now. So it's one of the largest players in that. But over and above that, they are also providing a lot of services to help the companies track the management, expenses, etc. As Pavitra pointed out, they are raising a little more than about 562 crores in terms of the size. But it's a mix of offer for sale and a fresh issue. So if you look at the offer for sale, details, it's 392 crore of a fresh issue. And of that, 300 crore rupees is what the company is spending to enable customer acquisition and their tech spend. So that's a very large amount that they're spending out of the fresh issue, 300 crores out of the 392 crore for customer acquisition and retention. But let's get in the management to talk more about, this company, Zaggle Prepaid Ocean Services. We're now joined with the CEO of the company. Let me invite on Mr. Raj P. Narayanam, the executive chairman of the company. Thank you very much for joining in. First, if you want to just tell us a little bit about the business model. I explained what I could understand, but you want to add some more color on how you're making money. And this 300 crore of fresh issue that you are going to be spending on customer acquisition and retention. It's a large amount.
Yeah, thank you. Thank you so much, for inviting me on the show. Rima, first of all, I'll explain the name Zaggle Prepaid Ocean Services. Zaggle is an antidote to haggle, and if you know, in India, every Indian wants to haggle, whether it is at a street place or in a shop. Okay, and we wanted, to ensure that there is no haggling, just zaggling. That's why we say, don't haggle, just zaggle. So that's the one piece on the name. The ocean is basically for its depth, its vastness, and that is what we provide, to 2,400 odd, enterprises today. And that vastness of our services is what is called Zaggle, Prepaid Ocean Services. Now, to your second question, see, we are at the intersection of SaaS and fintech. We basically, deal with corporates for their various offerings, which is, possibly, employee reward and recognition, employee benefits, then, channel incentives and rewards, then expense management. And now we have entered into the business spends through our platform called Zoyer. And Zoyer is an accounts payable platform. And earlier, we were all, dealing in prepaid cards. We used to have two pieces. We will provide the software to do the computation and then provide a, payment instrument for them to do a transaction and a redemption. Now, this year, which is, March ending 2023, we have started, the credit card as well. So now our offering would be, prepaid as well as credit card. And the reason, we are raising 300 crores for, overall, we are raising 490 crores in primary and 171 crores is in the OFS. So, and why we are using 300 crores for, the customer acquisition and retention is that, as we are expanding in 2020, we had about 400 odd clients. Today, we have about 2,400 clients. From a revenue of 68 crores, we have grown up to, a revenue of 553 crores as of March, 23. So, and as we go on, if past is a reflection of future, you can very well understand what we'll do.
Okay. Mr. Narayanam, hi, good morning. Prashant here. Sorry, so so the card that you offer, it's like a, for the lack of a better kind of comparison that I can think of right now, it's like a Sodexo card, sir?
No, so, this card, so Sodexo has, their own card. We just compete with Sodexo in one category. Our card is a multi-wallet card. It has got 99 wallets in it. Just imagine that, let's say CNBC were to award you, reward you with a performance bonus. They were to give you, a meal benefit. And let's say you were traveling, to Delhi or any other place and your expense had to be reimbursed. All of that, comes into a single card. We have a single dashboard and we have a single app for the user. So user gets the app, corporate gets the corporate dashboard, and the user gets the card, to use and swipe it at any POS machine or virtually.
Right. So, you said you compete with Sodexo, but in one segment, and that segment is food.
Meal benefits and reimbursements.
Right. And
so you have you have the tax benefits, Prashant. You have the meal benefits, which is given in the OTR, and then you have the old tax regime, and then you have a lot of other reimbursements like attire, fuel, mobile, etc. All of that.
So in terms of this segment, right, these prepaid cards, meal and how is it split up in terms of the usage? How big is food and the rest?
Yeah, so food is about 8% of our business. Okay, overall business, and the rest of it is rewards is a large piece, channel incentives is a large piece of our business, and overall expense management and reimbursements is a large piece of our business.
Okay.
All right, got that. So that is, how your business could really be split. But can you also take us through a little bit of how you tie up with these partners? How many do you have right now? What is the plan to go ahead and add more clients over here? And, how would your customer base increase? Or also, what is the kind of cost that you have to incur to add these clients? If you could just help us with that.
So, we are extremely, if you look at, our CAC is low in terms of acquiring the, corporate. So, we have a digital as well as a, physical model. We have, feet on the street. We have, a full-fledged inside sales team. So, our acquisition, of these corporates is easy. But then what happens is when the users are using it, sometimes, Indians users, all of them, really want to get a deal on it, for them to go ahead and use it. So, for that purpose, when the corporate transfers the money on the prepaid card, it remains as a float with the bank. But, when they swipe it is when we bill the bank. Okay, so that is why what happens is that, we have to nudge the users to go ahead and spend more and more. The more they spend, the more money we make.
You make company when the corporate first issues the card to the employee and then tops up every month, and you also make money when the employee spends. Is that correct?
So, yeah, so there are two ways. So one is, we charge the, enterprises for using our software. So that shows, how much has to be loaded, to whom it has to be loaded, and how it has to be loaded. And, then it computes where the money was spent. And when, there is a transaction, when the user goes on to, let's say a store and, uses it there, is when we make a transaction income. So our two parts of our income is, SaaS. SaaS is when we charge them per user, per employee, per user, per corporate basis. And then, when they use the, card for transaction is when we make the interchange, which we bill to the bank.
Okay, and how much do you, so give us an example. I mean, what are these charges?
So, typically our rack rate is 249 per user, per month to a corporate, and it is the corporate which pays for the users. And then, the interchange is roughly approximately about, 2%, 1.85 to 2% is the transaction fee, which is, called the interchange in banking parlance.
So 249 rupees per customer per month. Per month.
Per customer per month is our rack rate, and then as there is negotiation depending on how large is the customer. If it's a very large customer, then we'll bring down it a little bit, to maybe 149 like that. And if it is a smaller customer, less than 1,000 employees, we keep the rack rate on.
So what is the average then? Is it somewhere between there? What is the
average? Be about 180 odd bucks is how the average.
And this 180 rupees you will make irrespective of whether. Okay, I mean, so if you issue 1,000 cards every month, you will make 180 into 1,000. That's how it. That income is assured.
Yeah, it also depends, the users who have got onto the platform. The corporate may have, let's say, for example, 5,000 users, but, on the platform, there are only, let's say, 3,000 users. We will bill only for 3,000 users.
Okay. So can you explain your margins for us? It's been a bit volatile. FY21 margins 11.5%. FY22 went up to 16% plus, and then it came down to 8.5%.
So, but there are, I'll tell you why, those margins have, come down. There are two, reasons, for it. One is that we are launching the credit card piece, which got launched in, March. We spent a lot of money, about 13.5 odd crores on, on developing this piece for credit card. The entire Rails infrastructure, of the credit card was built, and, we signed up with multiple banks for the credit card piece. So that is totally expensed out. Okay, so that's why you see that the margins have, reduced a little bit. The second is the ESOP expense. We as a policy of sharing the wealth with, all our employees, went ahead and gave ESOPs to every employee, right from an office boy, to the MD. Everybody was given ESOP, and we took a hit of about 14.6 crores there. If you add both of those back, you will see an extremely healthy margin. And these are like one-off activities which are not going to get repeated often in the future.
What are sustainable steady state margins from here on?
Can't make any forward-looking statement, but what I would say is that what we have done previous year, we will be easily able to maintain and increase them.
Okay, and just one thing in terms of income that you make, say, what is the split between the assured income and the interchange?
Yeah, so assured income is roughly about 15 to 18% of the interchange. Interchange last year was 170 crores, and we had like 25 crores of SaaS fee.
Okay. And just one point, how many cards outstanding, how many customers really in that sense do you have? And what is the rate of addition that you've seen over the years, and what do you expect going forward?
Sure. So, just to give you a, brief, in April of, let's say 2020, we started with about 410 odd clients, which became 1196, went up to 1800, and this year end, which is March 23, March 23 is about, 2400 customers. That is how the customers have increased.
That is 2400 corporates, right?
Corporates.
So I mean customers. How many individual
users? So
sorry,
users,
yes.
Users. So we are like about 22 lakh users, which is about 2.27 to be precise, is the number of users.
And how many of them drop off? Do you have any corporates who've discontinued your service?
So, ours is an extremely sticky proposition, because we integrate through APIs, our integration gateway called Zaggle Integration Gateway. Zig is a beautiful product. So we integrate with their, with their ERPs, and the retention rate is above 98%. So 1.57% is the drop-off rate, or you can say that, corporates who moved off.
So 22 lakh will be what number next year? Every year, how many customers users do you add? What's been the run rate?
So, it also depends. See, Prashant, there is no exact, formula.
But roughly, would it?
Roughly, we typically add about 6 to 8 lakh users. And then there is some iteration which happens in the users. So let's say we get a very large corporate, and that corporate is not adding people, it's removing people. Then there will be some iteration. If they're adding people, our number of users will grow.
So net every year, what is the accretion in users?
For about last 3-4 years, it has been in the range of 500,000 to 600,000.
Okay, 5 lakh to 6, and your user base is 22 lakh.
Yeah, user base is 22 lakh. And, last year was an exceptional year when we added many more users. But general, on an average, you take it as that about 5 to 6 lakhs users is what we would be adding.
And you'll be able to do it. I mean, you'll be able to maintain this pace going forward as well.
Prashant,
This year,
I'll just tell you, that, we are a highly capital efficient company, with just about less than 15 odd crores is what capital we raised, and we have been able to reach here. I'm a first generation entrepreneur. Imagine with the money what we are raising, what we will be able to do.
Got it. And we wish you all the luck for it. So great conversation. Sorry if we kind of probed you a bit too much, but we were just trying to understand, the business. But good luck, sir. Thank you very much, and we hope to speak with you soon again, around the listing time. So thank you. Thanks very much. Okay, so that is the new IPO, which is opening up. We hope that kind of provided you some idea about what the business is about and, the overall picture, really. So unique business in that sense. And Rima, that's the thing, right? I mean, with so many IPOs, it's not... I remember a time when, IPOs used to be, you could predict what the business is about. I mean, real estate or infrastructure or contractor but now it's kind of opened up. You have so many new sectors, right? New segments.
And the way people are making money, right?
Yeah.
So a lot of time is spent in now understanding their business model, what drives their financials, the P&L. But anyway, we've gone on for a bit. Manisha is waiting by on the other side to talk about commodities. Stay tuned.
Stocks where there's valuation comfort versus some stocks where there's discomfort. First to the stocks where there's some comfort, and you'll see a lot of pharma names there, Apollo Hospitals, Dr. Reddy's, and some PSU names despite the rally, BPCL, ONGC, and some commodity names like Coal India and UPL, and stocks which are now trading above their median valuations or recent average multiples. A lot of IT names after the recent rally, HCL Tech in particular, Infosys, Titan, which is trading at 20% premium, and Reliance, largely because, earlier Reliance was pure oil and gas play. Now it's a lot of new age play. That's why as well.
All the IPOs that have come, say in the last 5 to around 6 years, well, they've been pretty good. Just take a look at some of those big gainers. And in there, GRSE, RVNL, and Moscow Dow. Take a look at the return. We're talking about 1,000% return, 800% return, as well as a 600% return. And IRFC as well is up more than 220%. Now let's run you through a couple of data points out there. Now, HAL, Hindustan Aeronautics. HAL has been a rank outperformer. The IPO came at around 1,240 rupees. Then you had the OFS that was at around 2,450. You would have said, well, it's done. The stock has doubled. Well, after that, from there, you're getting another 50% return out there. So the government of India has looked to take off some money off the table, but now they'll be tempted just going by the stock price itself. Current holding is at around 72%, and the market capitalization now is close to around, $18 billion approximately. Moving to the next stock, RVNL. Out there as well, they did an OFS. The stock price move was splendid. 19 rupees, it went up by nearly around 5 times. The government said, okay, let's take some money off the table. They did an OFS. Guess what? The stock price is up nearly around 50% even from there. And now the market capitalization on this one is nearly around 37,000 crores. And the government holding is at around 72%. Let's pull in the valuation bit as well for a couple of these stocks. GRSE and RVNL. Both of them, the promoter holding has come down below the 75% odd. And both these two stocks are trading at around 20 times. So that's, I think, par for the course. But there are two stocks particularly that I'm looking at. One is Moscow Dock, because the kind of run that we've seen on that particular stock, the government entity holds close to around 85% out there. The market capitalization is close to around 43,000 crores approximately, and the stock is trading at more than 50 times its forward earnings. So, at some point in time, the government could be tempted to take some money off the table. The other one I'm looking at is IRFC. 86% stake with the government of India, more than 1 lakh crore of market capitalization. And on a price to book basis, it's trading at nearly around 2 times odd. So maybe these two could be interesting, interesting stocks going ahead, because at some point of time, the government of India could take some money off the table. So just thought I'll highlight that as well.
Welcome back. You're still tuned into Trading Hour here on CNBC-TV18. Now for the markets, it is holding up just around 26 points in the green, but the mid-caps have moved even higher. So it's now over 300 points higher on the mid-cap index, and the banks also around 80 points. So this is, of course, the PSUs were doing a lot better since the morning, but some of the private banks, the likes of Axis, have now seen a move higher. But let's talk about the commodity market action as well. Manisha joins us, and today she's going to talk about the cocoa prices that we've seen. Manisha, why has there been this kind of jump?
Oh, well, yes, not a 10 or a 20, but it's a 44-year highs in case of cocoa prices. I mean, that tells you the kind of severity you have or the big deficit that you have between demand and supply right now. So when you look at the New York prices, we are trading at a $3,900 a ton kind of a move there. If you look at New York and London cocoa prices, the current contract has hit an all-time highs. Even the future contracts have been surging. So the problem is not just near term, but slightly ahead in the future as well. The sentiment is as bullish. The El Nino concerns clearly have been supportive, and West Africa, which is a major producer, has been battling heavy rains and also black pod disease there. 20% of cocoa crop in Ghana also, or rather Ivory Coast, is also expected to be infected because of diseases there. Ghana crop for 2022-23 fell 24% at a 13-year lows, and the markets are anticipating concerns going forward. Nigeria, which is another major exporter, also has seen exports decline 14% year-on-year basis. In the meanwhile, the demand has been quite strong. So when you look at the chocolate sales in the last year, they have gained up by 10%. There also is a report from Euromonitor which says that 2023 global chocolate demand is expected to gain up by nearly 5.8% on an year-on-year basis. So everywhere that you look, the demand numbers do look strong, but the prices are slated to rise higher from here.
Okay, thank you very much for that. Get into a break. We'll come back and talk more about the market. Stay tuned.
आपदा है, इतना नुकसान हो रहा है, तो इस समय तो जैसे पूरे प्रदेश की स्पिरिट हमने देखी है, भावना देखी है कि सरकार में भी वही भावना रही है। मैंने रास्ते में आ रही थी तो कुछ लेडीज श्रमदान कर रही थी। उन्होंने कहा कि जो नेशनल हाईवे है उसमें काम आस्ते से चल रहा है, उसको तेज़ी से करना चाहिए। तो पूरी जो कुछ भी बता भी रहे थे कि काफ़ी लोगों ने दान भी दिया है। कुछ रास्ते में कुछ लोगों ने रोका, उन्होंने भी, किसी ने 5 लाख का चेक दिया, 1 लाख का दिया। ये भावना जो है, ये जो हिमाचल की भावना है, जनता की भावना है कि एकजुट होकर आपदा का सामना कर रहे हैं, उसी भावना से जुड़ी हमारी सरकार की भावना है और हमारे मुख्यमंत्री जी की भावना है। तो सब इकट्ठे इस तरह से काम कर रहे हैं, एक दूसरे की मदद करने के लिए, एक दूसरे की सहायता करने के लिए। बहुत बड़ी चीज़ है, पूरे देश के लिए एक मिसाल है और पूरे देश को इसी से सीखना चाहिए। लेकिन इसको देखते हुए मैं ये कहना चाहती हूँ कि केंद्र सरकार को भी इसी भावना से मदद करनी चाहिए। इस समय ये नहीं देखना चाहिए कि यहाँ पे हमारी कांग्रेस की सरकार है या भाजपा की है। ये राजनीतिकरण इसका नहीं होना चाहिए। जितनी मदद हो सके उतनी मदद हिमाचल की जनता की होनी चाहिए।
More investors joined the Reliance Retail's $100 billion club. In the latest, KKR has made a follow-on investment of 2,070 crore rupees in the retail arm of Reliance Industries to buy 0.25% stake at 8.36 lakh crores of valuation in rupee terms. Now, with this investment, KKR's total stake in RRVL will increase to 1.42% stake from 1.17% stake on a fully diluted basis. Now, the last investment, remember, for KKR in this company was at half the valuation 3 years back. Now, looking at the second round of fundraising at $100 billion, which started just before its AGM in August, well, Reliance Retail has now raised a total of 10,347 crore rupees by selling 1.24% stake to Qatar Investment Authority and now KKR. Mukesh Ambani had hinted at a strong global interest in his retail business in the last AGM, of Reliance Industries. Now remember, it comes after 3 years of the last fundraise at around $50 billion valuation, in which a slew of these marquee global investors like Silver Lake, KKR, Adia, GIC, TPG, amongst others, had pumped in over 47,000 crore rupees for 10.5% stake in the retail arm. Double the valuation comes on account of the scorching pace of growth for the company, as the chairman guided that retail will be the fastest growing business in terms of revenues as well as EBITDA. Now sample this. Reliance Retail has shown a 30% year-on-year revenue growth in FY23, which is faster than the other business verticals of RIL. Now, in terms of its financials, 2.6